Stock is Adobe, ticker ADBE, and you can tell by this stock chart down and to the right, just like a lot of software names, this was the backbone of the internet and technology, and what AI is implying is that is in huge jeopardy. Wall Street loved SaaS software models for a couple reasons. One, it's pretty easy to grow them if you've got a product that everybody needs. Adobe did. And number two, recurring revenue and really high profit margins lead to a lot of bottom line number. Take a look at the PE from 21 to 24 that Adobe carried. It was a 40. That number is down to now 15. Take a look at Adobe's numbers. It is a $104 billion company with no debt, and it trades at about 15 PE here. It was expected to grow about 10% top line, and look at the margins on this company. EBITDA margins of 48%, net income margins of 37%. That is why Wall Street loved this company. And look at this, almost $30 in EPS and this 8 and change PE out 2 years if all of this is true. If you've been watching our videos and want to invest alongside us,
click the link in the comments, select your brokerage,
search for ticker RVER wherever you buy stocks.
Thank you, and now back to our video.
So let's take a look at what Adobe is likely implying here. $24 billion in revenue was supposed to become $31 billion in revenue. That's probably in jeopardy. They're probably not growing at 10% top line. Why? All of these AI tools are probably going to slowly eat its lunch. So let's assume the $24 billion in current revenue actually goes down to about $20 billion. If you did that and you kept margins the same, you'd get about $9 billion in EBITDA. And this $104 billion would probably be fair or even a little bit cheap on that $9 billion in EBITDA. What the market is really saying with this 8 PE ratio is that $20 billion is probably going to get matched by an EBITDA margin of something lower, something like 30, which puts you in the $6 billion in EBITDA category, which makes this $104 billion a very fair price for Adobe here. That is what the market is taking a look at and seeing in future Adobe revenues and EBITDA margins. So that really low PE, that really low valuation Adobe is implying that the revenue and net income is likely headed lower, not higher. We tend to think when it comes to Adobe, that is the very likely scenario. AI is eating lunch all over the street. Adobe is one of the plates that is definitely eating off of here. We're not sure what valuation to step in here, but given the numbers we just showed you, we don't think it's quite cheap enough to step in here. Thanks for watching. We really appreciate it. All the likes and subscribes are incredible. And if there's anything you guys want to see, let us know.